Hello dear friends. Using methods different from many strategies we have previously learned, we will discover ways to increase our capital once again. The surprise ups and downs of the financial assets you invest in occur with the volumetric-based differences in market movements. We are trying to filter out difficult-to-predict movements by accurately analyzing price trends and using indicators that will truly benefit us effectively. This way, the probability of increasing our capital by making a profit becomes quite high. In this video, we will once again see tactics parallel to our goal. Before we begin, please don't forget to subscribe to the channel, hit the like button, and turn on the notification bell. To start our first strategy, let's add our indicators and carefully optimize their settings. Let's examine our first example on the screen. It's a fairly simple strategy that I'm confident you'll easily grasp. We can see that the two moving average lines have turned from green to red. Both lines turning red indicate that a downward movement is about to begin. Additionally, two large red candlesticks have dipped below the moving average lines. Since I found the closing level of the first red candlestick below the moving average line unsatisfactory, I am basing my decision on the closing level of the second candlestick. Later, we anticipate a retracement movement, and after the completion of the retracement, we draw a support line at the lower level and await its break. Meanwhile, our indicator has turned all bars to red, indicating that the downward pressure persists. As we go through these steps, if we observe a closing above the moving average lines or the formation of a green candlestick, we will cancel our short position expectation. Everything is going well at the moment. And now, a new red candlestick has formed, closing below the support line we drew. At the same time, the QQE mod indicator showing a red column will be our final confirmation. The conditions for a short position have been met. It would be appropriate to open a trade based on the closing level of this candlestick. We set the target level at 1.5. While buyers attempted to intervene in the market by pushing the price upward until our trade reached the target, our entry into the trade based on multiple criteria led us to our goal. All criteria indicated that selling pressure was stronger than buying pressure. Before transitioning to a completely different strategy, let's also look at an example of a long position within this strategy. Now, I wanted to show you an example of a sideways market, which is particularly the nightmare of investors, because a sideways market erodes the capital of many traders. However, let's witness together how this strategy performs even in challenging conditions. As you can see on the screen, after a period of sideways movement, a large-bodied green bullish candlestick closes above the moving average lines, and simultaneously, the lines turn green. We understand from this that buyers have intervened in the market. We observed a peak formation after a few candlesticks, albeit weak. As always, we draw a resistance line at this peak and wait for it to be broken. I would like to emphasize that, while indicators assist us, they do not provide information about the future since they offer data based on past price action. For this reason, to be more certain about a downtrend or uptrend, we additionally draw support or resistance lines. The breaking of the support or resistance line we draw is crucial for opening a trade in the right direction and minimizing the risk factor to the utmost. Yes, the resistance line we drew was broken, but it was surpassed with a very weak movement. During such times, if the trader is not convinced by this breakout, they can consider the next satisfying peak level. However, since we are still working with the example, let's continue by accepting the peak level here. Our long position trade with a 1.5 ratio reached its target. Of course, determining this target is the ultimate goal, or taking partial profit and adjusting the stop-loss level to the entry point to aim for higher targets, can be shaped by the trader's risk management. I am teaching you the basic rules of the strategy here, and I hope it will be beneficial to you. Now, let's broaden our repertoire by learning a different strategy and expanding our experience to be able to trade in the market. Let's now learn how we can engage in successful trading by capturing trend reversals. A significant number of professional traders focus solely on chasing trend reversals and enter trades when conditions align within their established strategy framework. Trend trading, breakout trading, and support resistance range trading are all popular methods of trend reversal trading. Firstly, in our example on the screen, we observe a continuously rising trend with new highs and lows forming. Since we are aiming for reversal trading, we will wait for the break of this trend. At the point I have marked, we see a candlestick painted in red by the indicator, breaking the rising trend in the opposite direction. To ensure that this movement is not a false signal, we must meet the necessary conditions. The candlestick breaking the trend in the downward direction does not have to be red. What is important is the correct break of a trend line that is drawn accurately. Now, we see that the price has retraced somewhat, approaching the trend line once again. With this movement, a new low has formed. We are now drawing a support line at this new low and waiting for it to break. This way, we will try to convince ourselves that the trend has reversed. And at this point, we see that the support line we drew has also been broken. Thus, we can talk about the beginning of a genuine downtrend. It would be appropriate to open a trade at the closing level of the candlestick that broke the support line. The initial target point is the 1-2 level. And as you can see, it was a perfect trade. The price went directly to the target without entering our risk zone. Now let's look at a short position example. Here, we clearly see the formation of a downtrend. The dominance of the seller group in the market is noticeable. And a large-bodied green bull candlestick broke the downtrend line in the opposite direction. Now, we need to make sure that an uptrend has started. Of course, as always, to confirm the authenticity of this price action, we draw a resistance line at the first peak level formed after the break of the trend line and wait for it to be breached. We have set up another great trade and achieved a 1-2 reward ratio. Now, I will try to show you how to reach a higher target. After reaching a 1-2 reward ratio in this trade, we pull the stop loss level to the entry point and draw our Fibonacci tool from the recent low to the peak level formed recently. The ultimate target is now the 1.618 Fibonacci ratio. Let's now look at the price action. Unfortunately, the price retraced all the way to the entry point, causing the trade to partially close with a profit. Now, what would happen if the price resumed an upward trend without touching this level? Here is the result. It reached the Fibonacci 1.618 ratio that we initially planned when we placed the trade. Such setbacks are always present in market trading, and not every trade is successful. Please remember, the real goal in trading is to generate more profit than potential losses, and everyone who carefully follows our educational videos on the channel will undoubtedly achieve this efficiency. Until we meet again.